Hi folks, this is Sean Hyman from Chart of the Day, and I want to talk to you about how to know the direction to trade for high probability trades. When you learn how to take high probability trades, it's going to take your win percentage up, meaning how many winners versus losers you have, and it's also going to help you learn to elongate your trades. First thing I want to point out is that you want to trade with the trend. Notice how many trend changes there were on this Euro-Dollar daily chart. We were in an uptrend, then it switched, and we went to a downtrend. So over the course of looking back 1 year on the daily chart, what we see is one trend change. Now, what's the chances of you catching that one defining moment throughout the course of an entire calendar year, or looking a year back? What's the chances of you calling that top, or what's the chances of you calling a bottom when it changes as well, when trend changes don't happen that often at all? That's why the pros know to trade with the trend. So they only take buy signals in this uptrend. They only take sell short signals in this downtrend. They can exit whenever on an opposing signal, but I suggest exiting not based off of an opposing signal, but based off of just moving your stops behind your order. So we got an uptrend here on Euro-Dollar. So we came out of a signal here that's just almost off the chart. So there's a buy. And as it starts moving up, you can move your stop up occasionally as you get a good, decent amount away from your entry. So, you get 100, 150 pips up on a daily chart, and you want to move it, 50 pips past, 30, 40, 50 pips past break even. You can do that, and then when it moves another 100 or so, you can move it another 30, 40, 50 pips or so, and just trail that stop behind. You get another entry signal here, put you right in here. You got to have patience if you're trading off the daily chart, because it went up, came back down to break even, and then takes off and never looked back again. You can take some of these signals that are fairly close to oversold right here. Those are more aggressive trades, because a true oversold signal is when it comes down, the stochastics lines come down, cross, and head back up above the 20 level. So a sell signal is when they cross and come back down below the 80 signal level right here. And a buy signal is when they come down, cross, and come back up above the 20 level. These slow stochastics are at 14.33 settings. That's 14.33. Nothing magic about that. It's just preferential settings that I prefer. So we've got a buy signal here. We've got a buy signal here. Right here, the trend changes. So we only look for shorting signals: short, 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 and short. In that, we probably wouldn't have lost probably but one trade max trading with the trend there. Now, I'm not saying it's always going to be that way. I'm just saying that trend was so definitive in both directions that it made it a powerful trend in both. Now, if you want more action, obviously, you can go to the 4-hour chart where you're going to get more signals. And you've got it slightly upward sloping here, so you're looking only for buy signals, nothing for sell short signals. So you ignore this side of the chart basically for entries, and you focus on this side of the indicator. So upward sloping, so we go for a buy, here's another buy, here's another buy. Then the pair drops down below the line, the moving average, and the line starts to slope downward, so we look only for sell short opportunities. We got to be patient, because and don't get frustrated because this move happens. You're looking for high probability trades. You're not necessarily going to have to hit every single one. So you get your next sell signal here when this is still sloping downward. Remember, you're looking off of the slope, so even though it comes above it a little bit, you'd still take your sell signal. It would come down. You would move your stop, and you'd probably make a halfway decent meager profit right there. Then it flattens out here, so you can take either buy or sell signal. So you can take your buy signal here and your sell signal here. So there's a couple of profitable trades. It's still sideways here, so you can be short here, and then you can buy here. Remember, you want to wait till this comes over and up above the 20 level. You can buy here, come out and sell here. You're sloping upward here at this point, so I would only look for the next buy signal. So it comes down, and if you buy here, you would have probably gotten stopped out and had one loser. You catch it again here, and you would have bought here, probably come out with a meager profit, and then it sells off and the moving average turns down, so you would have looked for the next sell short signal. So, over a 40-day period, you got a decent amount of trades. Yeah, you weren't trading in and out every day, but you also weren't having to be a screen jockey. You could have actually had a real day job and trade like this. And so you're allowing the trend, the moving average, to be your bias. You're not being swayed by news events. You're not being swayed by anything else out there. What you're being swayed by is the direction of the trend, and it keeps you steady and it keeps you consistent because it is a constant. It's one indicator that's giving you timing, and the other indicator is giving you direction. So notice I don't have 10 indicators on my chart. I've got 2, one for direction, one for timing. And I'm trading larger charts. The further you go down on the charts, and that was a 4-hour chart. This is an hourly chart. It will get a little more complicated. You will get more signals, and at times that will be it will definitely give you more signals, but it's going to change directions, quite a bit more. So you're going to have to be on your toes more and very aggressive at moving those stops up and that sort of thing. So I think a lot of people are going to be best served starting off on the daily and 4-hour charts. And then, as they get better at it, if they want to speed up the pace and go to hourly chart, so be it. Let's look at one cross for just a moment as well, Euro Yen. And let's go to the daily chart here. And we'll take a quick peep at what we had here because I trade currency crosses in my currency cross trader service. And here you were up. Here you were sideways to down. You start downward sloping here to aggressively downward sloping. So on the left here, we're just looking for buy signals. So here was a buy, buy, buy. All those would have been profitable. And again, we exited out here. We're flat here, so we can take buy or sell. So we take a buy, move our stop up and make just a little bit. Take a buy, move our stop up and make just a little bit. We short here, come down and have a decent trade. We're sloping down at this point, so we would look for the next sell short signal, which comes here. We'd short, and it would be to about down in here before we would become profitable. So a number of days later, we're still sloping downward, so we look for the next short signal, next short signal, next short signal. Now we change and we're back to flat. So flat is trendless. It's neither up nor down, so we can take either signal. So it means that we can take sell short here, and we could take a long signal once this comes down, crosses, and comes back above. If you allow this to be your constant, if you allow this to be your decision maker, you'll do well. If you chant this over and over, trade with the trend and not against the trend. If you say trend trades are high probability trades and counter trend trades are low probability trades, and you brainwash yourself in a good way, you're going to find that your winning percentage number of trades comes up. You're going to find that your number of losers goes down. You're still probably going to lose about 30% of your trades. That's called normal. You'll win 60 to 70%, you'll lose 30 to 40%. That's very normal. But remember, you're elongating your wins because you're moving that stop up. So you're winning overall more than you're losing in number of pips, and you're also winning more numbers of trades than you are losing. So over a rolling year here, or over a rolling 40-day period like we were looking at in the last chart, you would come out quite well and you would do well for yourself. But that's the key. Follow the trend. The trend is your friend. Hey, thanks so much for watching. Check out our the Currency Cross Trader service at worldcurrencywatch.com. You can talk to Sarah or Jesse or any of those about the service. That's where I give exact buy signals, entries, stops, limits, etc. God bless. Bye-bye.